Most traders will never make money reading the tape without being aware of 4 hidden major mistakes that tape readers make. In this video, our head of trader development helps you evade each of these mistakes so you can turn tape reading into your secret weapon. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005, and now Miami as well, and proud to develop numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from our prop firm so you can grow your trading account.
Are you struggling to make sense of the tape? You're not alone. You know, most traders fail to spot key opportunities because of very common tape reading mistakes, and it's costing you money. In this video, I'll break down the top mistakes traders make when reading the tape, mistakes that can really set you back. And the crazy part is many traders are never even aware they're making them. So getting right into it, here's the first and biggest mistake traders make when they're reading the tape. Mistake number 1, they're overanalyzing every tick. So here we have a stock that's really not going anywhere, and it potentially could break down, potentially could break up. It's really easy for traders to overanalyze every single tick. They can look at this little breakdown at 92.50 that just occurred and say, look, that's a big breakdown. But when you put the context in place, it's just consolidating in the middle of a range. There's not much to do, honestly, at that point. So we're just going to speed up the tape a little bit, and we'll give ourselves the luxury of still watching the tape and paying attention to what's happening. If you try and hit that breakdown at 92.5, look how quickly it goes against you. But the reality is this tape is not going anywhere. All you have to do is zoom out, allow the price action to set up for you. Don't get too focused on every single tick in this circumstance because so often the price action just moving around. We'll jump ahead a couple minutes and look at what it looks like and how different it looks like when there's a real break, when we actually can read the tape because we have real edge, not just get caught in the price action moving up and down and all around. Now we've actually got a meaningful tape to read. We have the price action breaking above a key resistance area. Let's pay close attention. Well, all of a sudden there's sellers right at that 94. You see the size showing up on the offer. We look for the buyer's ability to potentially take this higher. As we're watching this, we see size coming back in. The sellers are there. The question is, are the buyers going to take it higher or the sellers going to hold? Look at the size that's on the offer there. This is so distinctly different because we're looking at the price action at a key inflection point. We're not just sitting there and saying, wow, this is a really interesting, choppy price action. We're actually looking at it as it's trying to break out and observing what's happening on the tape. We see the sellers there. We see the size holding the offer. We see the bidders trying to step it higher. This is a really key inflection point. See if you can see a change. Look at this and watch. We're starting to take some of that size away. We took all that size. We go through it. Now we can watch the bid, but the bid doesn't hold. The bid's trying. It's giving everything it can. It's really trying to take this stock higher, but it's making us uncomfortable. It's making me uncomfortable as I'm watching this because although the buyers are trying, the sellers are still there. If that spray higher took out that much size on the offer, this should immediately be going up 20, 30 cents. This should have been a much better breakout. It's making me very nervous about this breakout because although the buyers seem to be there, the sellers are not lifting in the way they should have. We're going to pay close attention to the tape here. This is a moment that's of absolute importance. Now we see the buyers start to drop out. Now we see that change. You notice the difference between watching the tape as it's just chopping around in range and watching it as it breaks out of range. Now this is the last ditch effort for the buyers. If the buyers are going to step in, they're going to hold right here and they're going to drive the price higher. But they can't. And those sellers are firmly starting to take control. As we watch and our eyes switch from the bid to the offer, because now the sellers are in total control of the price action, we can clearly identify how important that moment was. We had that break higher of the range. We had that giant seller that got taken out. And as soon as that seller got cleared, the buyer should have taken it way up and through, and they weren't able to. This is the difference between reading the tape in just a random moment and reading the tape in a key moment. Understanding the context of when you should be reading the tape is so important. A bunch of traders try and make sense of every single tick, every price movement. But tape reading's about spotting patterns and key levels. It's not about obsessing over noise. So I'm the first to admit that 90%, maybe even 95% of all the tape out there is just randomness. It's noise. It's not statistically significant. There are 9,058 tradable products listed on a simple like FinViz scanner. That's too many to consider anyway. So if we break it down into a tradable universe, things with a decent amount of volume, say over 1 million, and a decent range, say over $1 average range, we still get a universe of 834 stocks in our potentially tradable universe. Every trading day is 6.5 hours or 390 minutes. So that equates to about 325,260 minutes of tape every single day. But for most days, about 60 minutes of tape is totally critical. That's like 0.02% of all the tape that's out there actually mattering to us as traders. And I get it. There are tons of beautiful stories about traders who used to just sit there and they'd read the tape all day in one symbol and they'd constantly make money. And there might still be some out there. But in what I do and how I've been passionate and driven about being the guy that helps traders get impactful results immediately, those outliers out there are not a good example of what works. And even worse, they create this trap for themselves that so many fall into of doing the right thing at the wrong time. They're making the right effort in trying to read the tape, but they're doing it at the wrong time. And as a result, they're almost doing more damage than they are good. We were doing a reading the tape session in our Inside Access training the other day, and we started with a stock getting ready to make a breakout. But before it, the stock was just in this range. It was choppy and it was in range. Honestly, the tape was meaningless at that point. And I could hear the newer traders saying, "Did you see that bid stepping up there? Oh, look, held offer." But these were all on things that didn't matter. And these traders were just blurred out things before the real opportunity even developed. The key is to do the right thing at the right time. So as we talk through the other 3 mistakes, we'll wind them together to create a path forward, a roadmap of best practices that can help you sidestep these big mistakes and do more of what matters when it matters. You can use this skill in a way that gets real results for your trading. Tape reading is this foundational skill for intraday trading. Tape reading gives you a real-time understanding of supply, demand, and market sentiment. It's like having a front row seat to the market's decision-making process. Now, tape reading gets its name from that old ticker tape machines, the ones that used to print stock quotes on this continuous paper ribbon. Traders would literally read those ticker tapes to analyze market movements, hence the term tape reading. Now, this practice was prevalent way before the widespread use of computers and electronic displays for market data. Traders would stare at the tape because that was all the information they had available to them. It must have been sort of like playing roulette. You buy a stock based on the action on the ticker tape and just kind of wait to see what happens as the ticker tape keeps kicking out time and sales data. Fortunately for us, things have evolved slightly, and you can now get the information from anywhere. You don't have to call your broker. You don't have to sit there and read a ticker tape. But think about what information we have that others never did. But traders made money reading the tape then, and traders still make money from reading the tape every single day. Now tape reading's watching the level 2, the posted bids and offers, and the time and sales, the posted transactions, and then the interplay in between those 3. There's some technologies that visualize reading the tape, and I hear a ton of new traders that use them. They talk about them as if they're magic, this magic bullet, but I don't hear many, if any, experienced traders using them on a regular basis. If you read through the great stories in Jack Schwager's Market Wizards volumes, you'll find a theme running through the 60-odd biographies collected there: tape reading. So most of the world's greatest traders are also great tape readers. A lot of them supposedly began their career trading nothing but the tape. But again, starting with only the tape would put us at this handicap we don't need to give ourselves. Starting with only the tape doesn't get the immediate results that we're looking for. And being aware of these mistakes and our beliefs that the tape is everything or that the tape is nothing allow us to get more impactful results in our time invested in developing our skills. We have to find ways to be more effective with our time, which takes us right into mistake number 2. So mistake number 2 is ignoring the opportunity. Tape reading doesn't work in isolation. You need to factor in levels from the chart, you need to factor in broader market trends, and you need to factor in liquidity conditions. Most traders actually misread the tape because they don't do this. They don't isolate the moments that matter, the spots that should matter, from the volumes of noise out there. The way we quickly whittle down a tape into something that matters from our 325,000 odd minutes into that 60 minutes each day is actually a really simple process that so many traders overlook. So we just use market context. There's a whole video about it, but understanding the context is a key place to start. You want to understand how the bigger players have been acting to create a baseline of how you might expect them to act before you begin to read the tape. We'll add a bit more context when we're actually looking through some really good examples as we talk about it. The catalyst for the stock. Is the stock in play? What was the catalyst? Was it fundamental like a news story or technical like a breakout? Depending on the type of catalyst, we can determine, are the buyers going to be aggressive? Should they be passive? How's it going to look? And then we go into technical analysis. We're not going to overdo it, but we're simply going to look at what do higher time frames say about the price action. Is the stock in this bigger range or is it breaking out? Those two things alone give us a really good context to create what we call the opportunity. And the opportunity creates this framework for us to think about who might be playing the game and how might they be playing it. We take that into our consideration because a strong market with a strong stock moving higher on a strong catalyst, while it's breaking above a key technical area, I'd expect those buyers to be aggressive. I'd expect the tape to be aggressive. As we're coming into this really important level in NVIDIA, right that area where after the DeepSeek news, we have not been able to hold above that 131 pivotal area for this stock. So now we have an opportunity right from the open. We can watch as the buying pressure starts to overwhelm that potential selling pressure. That area at 131 becomes so critical for us to observe the price action as it gets up there. We don't have to predict. We don't have to be at that 130, but that 131 is such an important area for us on the chart. We can just sit there and wait, allow this price action to bounce around, allow that balance between the buyers and sellers to occur. And we can just sit there and wait and say, if it gets above that key area, which happens to line up with that pre-market high, we can observe the tape to see if the buyers are still there driving the price action higher. We don't want to predict that we're going to have that break. We don't want to predict that the tape is telling us how strong the buyers are right now. We actually want to allow the price action to set up for us because price action is going to drive higher above that level. And as it drives higher, then we can really start to observe what's happening on the tape. So as we get this drive above 131 and we see some of the size coming in and get taken out, do you see the immediacy of that response? We just screamed higher. It's like that price didn't matter at all. We were 30 cents higher in a tick. But now we don't want to sit there and say, okay, I'm just buying it. We actually can observe, did it go high enough for us to chase? No, it didn't. So we can sit here and wait and watch. Our eyes can go between the bid and the offer. We can observe the price action as it's coming in. Let's see if we get a test of that level. Let's see if there's a balance point that gives us more information. Let's see if those buyers are willing to step up and hold the price above that 131 key inflection point. We can see the buyers trying right there, and then we get a quick dropout. And that quick dropout is going to give us so much information. Don't be afraid of the dropouts. If you're in it, it can feel really frustrating and really confusing. But if you keep your eyes glued to the bid in this circumstance, because remember, the buyers have just won, so we expect the buyers to remain there. We're going to keenly observe the bid as price starts to come in, as the potential for this failure occurs. But we can watch and observe. If the bidders continue to buy into this 131 area and above 131.5, we should have a really good continuation trade higher. We're watching as the volume is starting to taper off. You can see the volume down here on the chart starting to taper off. And we see those buyers really stepping in and holding the bid. You can almost feel it, like there's more buying, there's real buying stepping in here. These little dropouts become this tremendous amount of information for us, because as we see a dropout, then we're seeing the buyer step right back in. It's giving us an opportunity. This is putting us in a position to, if we want to buy above the high of this little consolidation where those sellers were at 131.80, 131.75, we can be a buyer above that level with our stop just below where we see the buyers currently. But we're not predicting. Remember, we're waiting to see that buy program kick back on. Those big players step in and really take the tape higher. We're looking for a clear and distinct change in the way the buyers are participating. They're certainly there. You can see them. They're not letting it drop. It's now spent a little bit of time above this level. Now let's look for a change. Now let's see if they can step in and clear that 131.75. There's the offer. Let's watch the bid. They're trying. There's a little battle here. Who's going to win? Now we distinctly see the buyer stepping right back up. Now we want to see price accelerate up through the level. We had our entry. Now we want to see the buyer sustain. We actually want to see the volume bars increase as we go as well. But our eyes can remain glued on the bid because we can just sit here and watch the price action. We should see the buyers step up and step through, step up and step through. We can speed the tape up even more so we can look at a little bit more of this move. The tape is 5x now, so it's going to look really fast, but just put your eyes on the bid. Watch the bidders stepping up and stepping through. Any seller that shows up on the tape, there's a little bit of a pause and then the buyers explode higher. They just keep taking the price action more aggressively to the upside. That's the expectation that we should have for any good breakout, especially one that holds such a key area like what we saw at that 131. We'll accelerate the tape even faster to watch as we see the price continue to step through, as buyers continue to press higher and higher, as the selling just dissipates, as the buyers continue to aggressively drive this price higher. We go on and on and on about different situations, but you get it. We just framed the opportunity, and we framed that opportunity with how we expect participants to act. Without a frame, you're likely to miss key things on the tape. It's like seeing a single tree and then trying to navigate around that instead of looking at the whole forest first and then isolating that best path forward. All of this gives us a path through the forest, an idea of what should be happening, what's to come, and where we can put our focus while we're reading the tape. But we can't avoid mistake number 3. Mistake number 3 is hesitating to act. The tape gives you this fleeting window of opportunity. Waiting too long can mean missing the best entries. So we have a stock driving down into a really key support area. And we can come in and look at what's going to happen in the tape, but we have to remember there are moments of really clear opportunity that get presented very cleanly on the tape. We have to be very open to them and willing to act as soon as we see that moment of opportunity. So right now we're seeing the price bop right around 90. There's some buyer at 90. We don't see them with size, but they're there. You can see every time we go below 90, there are wicks or fast moves back above 90. We're waiting for a moment of opportunity. There isn't a lot of information here. We can kind of maybe say there's a buyer at 90, but my stop's a little lower, but we don't have really clear and concise information on the tape presented yet. So all we have to do is sit there and wait. Look for something to happen that gives us a clear and distinct edge. And then when that edge occurs, we can act, and we can act quickly. When we're watching the tape, I'm just seeing the price action go back to that first point that we made, and it's just kind of bouncing around here. Yeah, they're trying to buy it higher, but they're selling it every time it lifts, and then they're selling it back down. And then all of a sudden, size starts to show up on the bid. You see that big size right there. Let's see if they come back. If we press back into that 90, let's see if that big size comes there. There's that size again, right at 90. Well, shoot, if this breaks lower, this should be a really good trading opportunity. We have that consolidation. If we can break to the downside and take out that big bid, this should be a really good trading opportunity for us. You can see us as we're getting closer and closer. Now we start to take out that bid. You can see us clear that entire bid with no hesitation. We're just selling right into that level. It gets taken out. Quick drop. But it didn't go anywhere, and immediately we're back above. That is a moment of opportunity for us. We just took out that really big bid, and we're not going any lower. So if we clear above that 90.25 where those sellers were previously, that's a tremendous amount of opportunity for us because the buyers did everything they could to defend that level. They were there with size. The sellers took it right through. You would think the sellers would have knocked it a point lower, and they weren't able to. So we finally have a moment of potential opportunity. And we can play that move in either direction. Either the sellers are going to take it right back down and we could short it if we get below that 89.75, or if we get above that 90.25, we can go long this. When that size gets taken out in that way, the price should just break aggressively lower, and it didn't. So we can just wait and see, and it looks like the buyers are trying to step it up now. The buyers are remaining on the bid, and the sellers haven't lifted. But once they lift, we have a moment of opportunity. We can enter long with about 50 cents of risk, looking for us to go all the way up to at least 92. Pay close attention to the bid. Don't worry about the offer. Look for the bid to step up and through. Or if the sellers come back in with aggression, then look for the sellers to come all the way down and take us back below 90. We see size coming in on the bid. And all of a sudden we're pushing up. And now we see that moment of opportunity. That was our moment right there. This is our moment that we can enter this trade. We saw an indication that that moment might occur, and that allowed us to get prepared to enter that trade when we saw that tape lift above that 90.25. Let's speed it up, and let's look at how this move plays out. You see that quick acceleration as we tried to press below that 90. We took out all that size, and then we finally cleared that mini consolidation right there. This is where the buyers can step in, and they've started to win this battle. Think about it in this way. The sellers did everything they could to drive the price action lower. The buyers did everything they could to defend it. And for a minute, it looks like the sellers won. but then the buyers never dropped. This created that opportunity for us to wait for that distinct and noticeable change. As we got that change, it gave us a trading opportunity to act. The tape told us this entire story before the chart could. This mistake happens so often early on, and I'll say this to you. Having seen traders get immediate improvement in their trading through our Scalp Radar course and through the tape reading we teach it in, many traders know way more than they give themselves credit for. They learn quickly when to execute, what they're looking for on the tape. But then they get into those key moments, those pivotal moments, and they put themselves in the right position, but then they hesitate to act. It almost always comes down to one simple thing. Are they in a predicting mindset or are they in a reacting mindset? You can ask yourself this question during the trading day, and especially when you're reading the tape. Am I predicting or am I just sitting back and reacting? Predicting is dangerous. It's allowing many of the what ifs to creep into your mind, and it creates this paralysis by analysis. Reacting actually slows time down. You're open to the information presented, and you give yourself a freedom and a playfulness to all of this. Now that we're avoiding noise, we're looking for the right opportunities, and we're keeping ourselves in a reactive state. Now we can talk about the most important mistake people make when they're reading the tape. I think the number one mistake people make, and the most important one, is when traders misinterpret large prints or they misinterpret sweeps. Large prints are just larger than normal size, occurring either on the bid, the ask, or in the time and sales. People so often associate that with needing to be a big player that has far more in their order book that they're looking to execute. That's not always the case. Sweeps are when you see a quick move in one direction. Price sweeps higher, price sweeps lower. A lot of times when those are occurring, you're actually looking for clues that aren't there. Not all large prints signal a move. Sometimes they're just liquidity fills or they're spoofing tactics. You need to understand the context. And that context is built from what happens after those large prints. What happens after those sweeps. Where a bidder comes in immediately and clears the book, or an offer comes in and sweeps lower. What happens after that sets the context so clearly. All right, so we've got a really aggressive sell-off that's occurred right from the open. We're watching the price action here. And we're in that moment of a little bit of pause. We don't really know what's going to happen. So we can sit here and wait for the tape to give us a clear indication. I'm not saying we have something in either direction at this point, but we're waiting for the tape to give us a clear indication of an opportunity that could be presented to us. A lot of people will say, oh, you can just read the chart, and you can. Fully respect that fact. But I always think the tape gives you a little bit more nuance and a little bit more detail about what's to come. Who's actually driving things right now? Is it the buyers or the sellers? If the sellers are coming through, we should expect really sustained selling pressure. The same selling pressure that's been there for a while. We should expect the up moves to be gradually sold. We should expect the sellers to just be there. If the buyers are going to step in, we need to see some sort of distinct change occur. So our eyes are going between the bid and the offer. We're watching the price action as it's just kind of chopping around right in here. And then we see the sellers step in, but with a lot of aggression. You see us get taken lower and then even lower. So our eyes can go to the offer, and do we see the sellers? Are they there? It feels like they might be there for a second. We saw a sweep lower. The sellers press down once again. But then immediately we see a sweep back to the upside. Now we get to switch our eyes from the offer to the bid. And if the bidders take us above that 275, just like that, we can see that clear change on the tape. We can see that moment where the sellers swept price lower, were not rewarded, and then the buyers immediately stepped in and took us all the way back up and through that prior area. These are all very different but very important things to notice on the tape. We'll go back and watch that one more time just to really get a good sense of what was happening and how it occurred. Watch again as the buyers are right there and there's a little battle occurring. And then watch the offer, watch the bid, watch as price and the sellers step in and sweep everything lower. It's almost like that sell program just gets aggressive and then more aggressive and then more aggressive. The sellers aren't letting it lift at all. You see that sweep lower. It's like they don't care what price they're getting filled at. They just want to get those shares out. But then what do the buyers say? The sellers are standing on that offer at 274. They're not letting it lift at all. And then the buyers say, okay, I'm going to flip on a buy program and it's time for us to get started. We don't have to do anything quite yet. The conservative thing to do is wait until we break above that 275, almost 276 area. But we can watch and see. What would we expect to see to the upside? We would expect a sweep. Those sellers that tried to press it lower couldn't. Now we have the price action on our side. Now we can look for a distinct and clear long. We can watch the bid as the buyer should step up and step higher. We noticed that change. We saw that moment where we swept lower, the sellers were not rewarded anymore, and then the buyers took us back up and through. And we can watch as the price action unfolds. You can see the buyers stepping in, and you can see the sellers trying, but the buyers are just there. They're persistent. Every time we drop out 10 or 20 or 30 or 50 cents, the buyers step right back up and through. This is the sort of tape you want to see if you're looking for a bounce here. This is absolutely not the tape you want to see if you're looking for a continuation short. As you look at a sweep lower, well, you could say, look at that sweep lower. But then immediately it's bought up and the bids step higher. The context there tells us this is an opportunity, not a threat. We can react to the opportunity because we're reacting. We're seeing it being presented to us. We're not overvaluing the context of what's occurring. Scalping trains you to read the tape on micro time frames. It allows you to refine entries and exits efficiently. So these skills are transferable to much larger trades. But if you're watching the tape at a critical resistance level, scalping teaches you how to spot those hidden buyers or sellers that are actually there. Those context shifts that will dictate what's going to happen and take advantage of those before others are able to. Scalping builds discipline. It helps you sharpen your focus. We start all of the traders on our desk with scalping, and then we help them read the tape so that they can take advantage of those opportunities and they train themselves to take advantage of those key opportunities when they're presented. But if you're serious about leveling up your scalping game, let me introduce you to a tool we use at SMB. It's the Scalp Radar. So the Scalp Radar identifies high probability scalping opportunities based on those key tape patterns, based on what's happening under the surface. It allows you to focus on the most actionable trades in real time. It kind of removes a lot of the guesswork and it helps build your confidence in your tape reading and your ability to execute scalping strategies. So if you're ready to take your trading to the next level, check out the link and learn more about the SMB Scalp Radar, and you can actually see it in action. Tape reading is a game changer for intraday traders. But avoiding these mistakes and practicing scalping can help you make all the difference in your trading. Start by identifying which of these mistakes you're making and focus on improving one area at a time. If you found this helpful, hit the like button. Subscribe for more trading tips and drop a comment below with your biggest challenge in reading the tape.